buttons on in both rooms. Boom. Good morning, good morning, good morning. Thanks, Lorna. Thanks, Mirza, for all your support in the rooms. Uh, thanks, thanks goes out to you traders, especially those of you that are showing up here on this holiday weekend, which historically is a very low volume. Not a lot of people in front of the charts this week in particular. Wow. We could see what happens when there is lower volume than normal. You can see more dramatic moves without a lot of reason. You can see wider bid and ask spreads because there's not as many traders bidding. So you can get the one offs that way under or overbid. So those are just some of the things to really pay attention to during this week. It is the very last day of the month, so technically you have a monthly expiration today as well as quarterly. It's the last day of the quarter. But truth be told, I believe, and I could be totally wrong here, but I believe most people that were trading quarterly expirations took advantage of last Friday to liquidate their positions or rebalance their positions due to the fact that this week tends to be low volume. So of course, we can still see some wonkiness, especially in the last half of the day where you get some rebalancing of the books on quarterly expiration. So keep that in mind as well as all the other things that I mentioned. But either way, what is happening in the market as far as economic data coming out, of course, those things that are planned, I like to be aware of when they're happening, but I don't necessarily base my trading off of them. I'm not real big on being a speculating trader. I wait for price to get to my buy zone or sell zone, and then I look to execute trades. So price really is what dictates to me if when I'm going to execute trades. With that being said, every single day, Trendy John and I, and by the way, if you weren't here yesterday or last week and you don't know, Trendy John is on a much deserved vacation with his lovely wife in Alaska. They are cruising to Alaska from Seattle. And yeah, so it'll be you and me for the next couple of weeks. Dual broadcasting. So my attention is divided between two rooms. That means not a I mean, it really doesn't make that big of a difference to me, except if you are asking me a question, it's pretty important that you tag me in that question so that I know you've asked the question. You can simply just click on my name in the chat or in the alerts, and that will tag me and then ask your question after that. Okay. All right. On the weekly chart on the ES futures, I love charting and off of the futures chart because it gives us 23 hours a day worth of data, much more than SPX. Although I trade SPX every single day and I don't trade futures, I still base my charting and my buy and sell zone decisions off of the futures charts. All right. So on the weekly chart for the S&P 500, price came back down into a demand zone where we also had moving average confluence as well as Fibonacci confluence. That happened last week. This week we are getting a bounce out of there. I do have resistance on the weekly chart up here at 70 575 by the all-time high 7648.75. On the daily chart, price yesterday, very nice rally candle out of a demand zone that was previously a demand zone that we came down, we tested, we bounced from, we came back down to it, and we bounced again. Now, price closed above the daily 21. This is a falling daily 21. So, price getting back above that daily 21 is bullish for the market. It also got back above our trendy EMA cloud, also bullish for the market. When we were trading inside of the cloud and below that 21 and the top of that cloud were resistance. Now you treat them as support. The cloud itself, the trendy cloud, is lined up with the weekly edge mid on the ES futures chart. So keep that in mind when we're looking at the smaller time frame charts. That weekly edge mid has daily moving average confluence. All right. As far as supply goes, we created a supply zone here on June the 5th with the big imbalance down candle. We gapped up into that supply zone. We closed inside the supply zone, meaning it was still a valid supply zone. We created another inside and down, and then another inside and down. That is where price is headed to right now, 75.41, 76.48 and 3/4. Once price gets to here, you have a decision to make. The overall trend is bullish. So this would be a counter trend trade, but it is a supply zone and a sell zone. So if price gets up to 75.40-ish, you have a decision to make if you want to be a seller in this zone. This is the place, if I'm looking to sell a rip, that has the higher probability of working out. Okay. All right. If I were a seller from this zone, as I mentioned, this confluence here of moving averages, trendy edges, and Fibonacci, this confluence right here would be a first target on a move down from supply. Then below there, I'm looking at trendy edges, moving averages, and candlestick structure down near 7,400. All right, let's look at the 4-hour chart now. ROM, sell the rip. You often hear buy the dip, right? It's just another, it's the opposite. So buying a dip means going long in demand for us. Selling a rip means going short in supply. Buying the dip means covering your shorts if you're short from supply. And sell the rip means cover your longs if you're long from demand. That's all it means. It's just the opposite of buy the dip. Love you too, Rom. No problem at all. All right, let's look at the 4-hour chart. This is a big move right here. It is very important. I want to show you why. We spent Tuesday, Wednesday, and Thursday and Friday last week chopping. And look, overnight, we got above the top of that choppy area. That is a good sign for bulls. Now, you do have the 50 and the 618 Fibonacci right here that you know, if you've been in the room any length of time, is my favorite zone to trade based off of. Our buy actually came down here in that exact same Fibonacci zone as well as candlestick structure. And now you have the same zone, but on the opposite side of the trade plus candlestick structure. So today we are opening up right in resistance, Fibonacci resistance right here, all the way up to our supply zone, okay? That means if I'm going long above a PMZ, I want to protect my profits as I am making them, scaling out of positions at targets and moving my stops if I'm long above the PMZ this morning. If you're looking for a short, I personally am focused on the red zone above the supply zone. But if you were looking to short this bearish GP right here, then I personally would wait for confirmation of lower highs and a break below the lower high bodied candle. If you get that kind of confirmation, it's a counter trend trade. And I would take my profits at targets and move my stops to break even. It would be a hard stop for me because it's a counter trend trade. A hard stop at break even once I hit first target, and after second target, I am trailing my stop. All right. The first area of support, just like on the daily chart, you have candlestick structure, moving average, trendy edges, Fibonacci reasons, all in this area here of about 74, 75 for that to be support on both the daily and the 4-hour chart. So that's what I would be watching. Okay. All right, let's look at today's daily blueprint. As I mentioned, this big red zone up here is supply on the higher time frame. It's obviously supply on the 2-hour chart, the 4-hour chart, and I believe the daily. Yes, and the daily. All those time frames. So I'm definitely calling that supply. That's my sell zone. It's counter trend. I will wait for confirmation before just selling it. All right. Upper weekly edge is inside of that zone at 75.72. The top of that zone is 76.04. Then above there, we have another supply zone, 76.26.5 to 76.48 and 3/4. Now let's look at the potential support below. Price has moved above an upper daily edge. That means that the upper daily edge we now look at as support. If price comes down to the upper daily edge, which it did at about 3 o'clock to 5 o'clock this morning, it came down, it wicked down there, and we popped back up. We actually made a higher high here pre-market. That's what this level is, just a pre-market high. So if we make a higher pre-market high before the bell, this 75.17.5 value will change. Okay. But your first area of support, like I mentioned, is going to be back here at this upper daily edge, at the weekly edge mid. Then you have candlestick structure here that we created yesterday morning. Inside up, remember we sold off and got the quick bounce, and we just continued moving up yesterday afternoon, just trickle, 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 trickle up. Well, and then we closed up in here, and during the overnight session, we pulled back into what looks like the bull channel. I could be wrong, but I'll run some fibs there. And then we got a pop. All right, so we do have this candlestick structure that was created yesterday. You do have the daily edge mid. So a weekly edge mid, daily edge mid, you're looking, now that price is above here, you're looking at these to be support. I mentioned I would run some Fibonacci's to get an idea of where that daily edge and weekly edge mid are at. So first I'm going to start at this low. I'm going to go up here to the pivot high. I'm looking to see if I have candles closing below the 618. And I do not. Do you notice? I do not. Therefore, my fibs are ran from there to the most recent high. That means my bullish GP has changed a little bit, but nonetheless, this is where we are at. All right. So I said the bull channel looked to be lining up with that weekly edge mid, and it is lining up with the weekly edge mid, the bottom of this candlestick structure. So if you wanted to trade the bull channel of this recent up move from Friday's low to the current high, it's going to put you right here. Now, I would use that daily edge mid. All right. So anywhere from the weekly edge mid at about 74, 79 to 74.52 is the bullish channel, plus giving it a little room underneath to capture the daily edge mid. Now, this would be more of aggressive. I believe the bull channels or the bear channels to go long or short from is a little more aggressive. Now, bull channels, bear channels. Bull channel is just when you're measuring an uptrend to 236 to 38.2. When we are trending, that is the zone typically that you're looking to buy a dip in. If we're more choppy, which remember, we spent 4 consecutive days chopping, then the bullish GP that I have marked down here is the better zone to go or to trade off of. Now, if we're measuring a downtrend, the 236 and the 38.2 is the bear channel. And if we're trending to the downside, that is the zone to short. Remember, all of this is fractal. So even if I'm measuring fibs on an intraday chart and we're trending to the upside, and you want to go long because we're trending from the upside or because we're having a trending day, then the bull channel is the zone to look to go long from. If I've got fibs ran on an intraday chart and we're just chopping, then I use the 50 and the 618. If we have a trending day to the downside, then the 23.6 and the 38.2 is a place I look to short. If we're chopping, then the 50 and the 618 is the place to short. Is the 38.2 to the 50 an imposter level? No, it's just a very choppy level. And it tends to be very, very choppy if we're just in a choppy day. The imposter level is the 76.4. All right, so this is the blueprint for today. This is your bull channel. If you choose to go long, you believe we're going to have a trending day to the upside, the bull channel is the place that I would look to go long from. It's the bottom of this candle formation right here. You notice inside candles, then an up candle. This is in line with the bottom of that formation, but this is the 23.6, the weekly edge mid. You got your candlestick structure from yesterday in here and the daily edge mid. If price gets below this daily edge mid, we find ourselves in this bullish GP. Then my first target back to the upside is going to be this 74.51.5, because then the daily edge mid I treat as resistance. All right. Below there, below this bullish GP, if we were to flush below here, look for the lower daily edge and the monthly edge mid, which are in confluence. And I'm just going to move this ME mid line up to the lower DE for now. 74.10. Look for a bounce in this area. If not, back down to where the origin of this recent rally started, 73.84.5, 73.57. All right. The other zone that will be on this chart is going to be the PMZ. Now, the PMZ prints on your screen as a rectangle, either a cyan colored rectangle or just a red colored rectangle. What determines the color of the PMZ box is just whether we are above or below the line in the sand, which is this cyan colored line on the chart. If we are above the line in the sand when the PMZ prints, it will be a cyan color. You got an idea of where the PMZ is looking to print. If you have the indicator, you have these labels up top. So even though we're an hour and 9 minutes before the bell, right now the PMZ high on the ES futures would be 75.14, and the PMZ low, and I'm rounding, okay, would be 75.10 for a risk of 4 points. That means it would print up in here right now as a cyan box. All right, somewhere about in this area, it would be a cyan color. Okay, the way the PMZ works is it can be either a buy zone or a sell zone. It does not matter. Okay, you have to be flexible if you're going to be a PMZ trader. You cannot be overly biased to one side or the other. Let the price determine your bias. Okay, that's what the PMZ would look like right about now. All right, so what do I mean by that? Well, what I mean is if I was overly biased to the upside and I only wanted to trade the PMZ above the PMZ, I would have gotten a good trade right here. And by good trade, I mean you would have got about 4.5 points, all right, to the upside. But remember, we're hypothetical here. I am overly biased to the upside. And so when we pull back into this PMZ, and I'm like, this thing is a buy zone, buy zone, buy zone. That's it to me. I would go along here and price flushes below it. Then I would start trying to find 222 reasons of why I'm still right, and this is still a buy zone. And come hell or high water, I'm holding on to this sucker, even though it wasn't a part of my plan, because once a price leaves a buy zone, friends, it's no longer a buy zone. Okay. But I was too overly biased that the PMZ, I was only trading it as a buy zone. And so then when price left this buy zone, I hold on for dear life. I am talking about me early on trading it. Okay. If this might not apply to you, but in case it does, I have to share the experience that can happen if you can't convince yourself to look at the PMZ, which is the most popular day trading indicator in the trendy methodology. If you cannot get your mind to be unbiased around the PMZ, I'm just going to say it. I wouldn't trade the PMZ. Okay? Because the PMZ is a neutral indicator. It is not a bullish indicator and it is not a bearish indicator. It is both. So if you can't be both bullish and bearish around the PMZ, then please don't trade it, because it's moves like this that my old extremely bullish self would have held on for dear life, and I would now be, well, I would have got in right here at 15. I would now be 17 points underwater. You tell me. You tell me. 17 ES points underwater. How much money is that? How much money is that? The minis. 17 points down from my entry. Thank you, Lorna. 850 bucks down, all because I can't get around the fact that this is both a buy zone and a sell zone. As soon as price broke below this sucker, it became a sell zone, my friends. Yeah, if you have a 10K account, you're looking at a 10% drop. All right? That's all I'm saying. That's it. Okay? So the PMZ is my favorite day trading indicator. But I had to get really good at being flexible and treating it as a buy zone and a sell zone. So in this example, the PMZ is a buy zone if price is above it and it pulls back to it. If I get confirmation to go long here, it would be a long. The long, and I'm on a 5-minute chart. I use a 3-minute for my confirmation, but just for this example, I'm going to show you. You got a low, you got a higher low, you get the break above the body. It becomes a long right here for me. Boom, up she goes, makes 6 points. Okay? All right. Then price pulls back to the PMZ again. I personally am waiting for confirmation. I don't get it because I keep making lower lows, so I stay out of it. But when price breaks below this PMZ, it becomes a sell zone. So if you were aggressive, you short the PMZ here at 75.20, and price is coming down into your first target, and you've made 25 points to the downside because you weren't biased, and you can trade this as a buy zone or a sell zone. That's what my biggest piece of advice for today regarding the PMZ is. Treat it as a buy zone if price is above it and the bottom of the PMZ holds as support. Treat it as a sell zone if price is below the PMZ and the top of the PMZ holds as resistance. If you've gotten it wrong, you treated it as a buy zone here. If the bottom of that PMZ does not hold as support, exit. If you treated it as a sell zone right here, and the top of the PMZ does not hold as resistance, exit. Get good at taking your stops if the PMZ turns into something you weren't expecting. All right? All right. I'll remove that from the chart. Let's talk about the gold line that you see on my chart. This is simply the 15-minute 8 EMA. This is an indicator that is shared throughout Simpler. I don't know. Lorna probably knows the very first Simpler trader that introduced this indicator because she probably, there you go, she probably coded this sucker. All right. So, Lorna, thank you. This is a John Carter. It's a John Carter indicator. Okay, guys? All right. It is shared throughout the community. It is simply on any time frame chart, I have this set for a 15-minute 8 EMA. When price is above it, it is support. When price is below it, it is resistance. I use it as a target, and I will also use it as an entry on trending days. On trending days, I use it as an entry. So if we're trending and we're making lower lows and lower highs, like on a 15-minute chart minimum, and we're making lower lows, lower highs, right? That means we're trending to the downside. This thing will be used as a potential entry for me to the downside. If on a 15-minute chart we are making higher highs and higher lows, that means we are trending to the upside, and this thing will be an entry, potential entry for me. All right, just like the PMZ, if it proves to be the opposite of what you expected, my suggestion is you take your stop. If it is just a choppy day, I'm not using this as an entry, but I will use it as a target. All right, the gold line on my chart is a VWAP anchored to, it's not anchored, it's just the day. Someone told me I didn't have to anchor this. That's what I've been doing. Okay. So when on a VWAP, volume weighted average price, this is where the most volume is coming in right now based on today's price action. 7,502, 7,500. I mean, go figure, right? All right. It is support or resistance. It is a magnet. I treat it just like the 15-minute. When you got confluence here and you got trendy levels here, this is a pretty big deal to me. All right. So those are what those two indicators are on the chart. These blue arrows are trendy turn signals. They have to do with the squeeze histogram showing potential turns. The blue arrows down show a potential area where price will turn to the downside. The yellow arrows show a potential turn to the upside. Those are trendy turn signals. These pink arrows right here, this is JC's, John Carter's Momo reversal arrows. Okay. All right. I think I've covered everything that could possibly have a question about being on my chart. By the way, if you're short, you're at that first target right here. Now, I personally would have used this area as a target as well, but as far as the lines on my chart, you would be at a first target for me. And of course, here's your next target. Okay. All right, now let's look at the NASDAQ chart. Rad says, if I'm taking day trades, what time frame, demand and supply should I note to follow? Rad, it's going to be a personal preference, I guess. I typically am looking at the 2 and 4 hour zones. That's where my zones are going to be based off of. I use Fibonacci levels as well, and I'm just measuring the trend on those 2 hour charts. Okay. But as far as where I leave my charts to trade off of, that's where I get my major supply and demand zones from. As far as what charts I use to trade off of, it's a 5-minute chart, but I look for my confirmation on 3 minutes. All right, NASDAQ. NASDAQ pull back down into demand, moving average confluence, and Fibonacci confluence on the weekly chart. It's right at, it is finding resistance at an upper monthly edge. You have a resistance up here evidenced by the topping wick and the big down move at 30,700 daily. Here it is, my friends. This is the top of the chop on the NASDAQ. This is a daily inside and down on the NASDAQ. Anywhere from, let's just say 30,100 to 30,300. Expect resistance in here. Expect selling pressure in here. So if we're looking to open up around here, I'm not getting super bullish here. But I will play a play above a PMZ, but I know that I am in resistance on the daily time frame and the weekly, and I need to mind my manners. All right? All right. Support is immediately below there. Here's your daily 21. Here is your EMA cloud. All right. Look for this to be support. Look for that to be resistance. That looks really close to each other to me. This is my favorite zone to trade, and this is where price turned around when we got this pullback here on the daily chart. There's not candle structure here on the daily, but there is on the 4-hour, and I'll show that to you in a minute. This low from last week, 29,160, is a huge key level because it's the low from last week. That makes it a key level. It's also below the 618 of this rally. That makes it a key level. And it is lined up with the bottom of the EMA cloud and the daily 50 SMA. Huge level. Huge level. Bulls need to hold this level with all their might. If they do not, this is where I'm looking for price to come back to with a pit stop right there. All right, immediate resistance, but your supply is right up here and we have not been back to test it. 30,662, right there to the all-time high. 4-hour. Well, hello, Chop. Nice to meet you. It's been a long time. I don't know what old song that is, but I bet my mom and dad listened to it. Oh, goodness. Let me put on the 50 and the 618 fib of the up move so you can see it, and the 50 and 618 fib of the down move so you can see it. This equals chop. This equals bottom of chop. That equals top of chop. Okay? That's what we got, guys. We really, on ES, we are getting above the top of the chop, but we're still finding resistance there. But still, we were getting above it. The NASDAQ has not yet. Okay. It hasn't gotten above the top of the chop. It came up to this big old imbalance candle this morning and it sold off from there. This is what we expect at these imbalance candles. Okay. So I'm not surprised. I'm not super bearish. I'm not, but I'm not surprised that we're getting a downturn right here. I just need to know, as part of that downturn, where could we potentially buy the dip intraday, right? Let's talk about it. Upper monthly edge, buy this high. This is the big imbalance candle, an upper monthly edge. I mean, I can make this thing gray for you again to show you that it is resistance if you need to see that on the chart rather than just seeing the upper monthly edge and knowing that that is resistance. I will make it gray for you right there. Okay. That way, you know, hey, expect selling pressure there. So if I'm long, I probably need to at least move my stop to break even right about there, right? All right. Also, this 2-hour inside and down right here, I'm not going to mark that as a supply zone. I'm sorry, but we're just chopping in this range. You got 2-hour inside and up right here. So between 30,000 even and this imbalance selling pressure, I expect chop. All right. If we break down below this body, 29,915.75, we very well could be coming back to a bullish GP and the inside and up candlestick structure created yesterday morning. All right. You see it? Got to see it to believe it. That is the potential here. I'm expecting support in this area, but I'm expecting resistance in this area. If price gets above the high from that choppy mess that we traded last week, the next target is 30,406. Supply is up here at 30,602. Immediate support is related to the inside and up, big candle at 30,000 even. You got an upper daily edge in here. Remember, price above an upper daily edge, treat it as support. Then 29,915 is where if you want to make this a gray zone to buy a dip, go for it. I'm not going to on my chart, but you can, just because these are way too close together. I know when I'm watching this thing that 30,000 to 29.9 is going to be a key support area that bulls need to step into here. So I'm not making it gray on my chart because the PMZ could print somewhere right around in here. And I don't like the PMZ being inside of a colored zone. I typically remove them anyway. So just to save myself some time, that's what I am thinking. All right. Conway Twitty, 1970. Oh, that's awesome. Uh, and the funny thing is, my brother is the one that knew that song right there. That's hilarious. All right, let's look at the PMZ. I'm going to tell you the same thing about the PMZ for the NASDAQ that I talked in length about for the ES. It's going to print as either a cyan rectangle or a red rectangle 5 minutes before the bell is looking to ring. You can see where the PMZ high is and the PMZ low is right now. That gives you a risk, the value between those two levels. All right. Right now, price is below the VWAP. Price is below the 15-minute 8 EMA. That means these are resistance. Now they are targets to the upside. Price is below a weekly edge mid. We treat it as resistance, even though yesterday during the actual trading day, we popped up to it and it was resistance and we came back down. And then we popped up to it overnight and we flushed back down. We popped up to it, weekly edge mid. We flushed back down. Then, right about midnight, my time, we get up and above it strongly to upper monthly edge resistance, and we start coming back down. This time, it holds us support. We pop up, it gives way. Price finally makes it back through it again. We get very close to upper monthly edge again, but notice that's a lower high, guys. High, lower high. We turn down from there. All right. When we turned down from this high, this was our low. When we turn down from this high, this is our low. It's really choppy in here right now. Okay, but we knew that could be a possibility because remember on the higher time frame, we have immediate resistance and immediate support. That typically leads us to choppy conditions until the bulls or the bears win. All right, that is the NASDAQ. Let's look at the Dow. It's relatively stronger. We are slowly but surely chewing through these topping wicks this week. The high, we created a new all-time high last week. 53,097 high. Hello. We're chewing through this selling pressure right now. This tomorrow is going to be an upper monthly edge, FYI. Just so you know, this is July's upper monthly edge at 52,714. We did not come back and fill the gap like we did on ES and NASDAQ on the Dow, but if we were to come back and fill the gap, you also have Fibonacci confluence and the 9 EMA on the weekly chart at 51,237. Daily. It is sideways, but it's sideways to up, right? Right here, 52,734. This was that topping wick back in the middle of June before we finally took it out, made a new all-time high, but quickly sold off from there. And now we're back up to it again. And ironically, that's going to be the July, upper monthly edge. Big resistance, 52,734. Keep that in mind. 52,734. For hour, this is not 4 hour. This red zone here is on a 2 hour. I have it still on the 4 hour chart. I really should remove it because it wasn't a 4 hour zone. But 734, that's there from that daily chart. It's just a big area of resistance that bulls need to push through. Here's our upper weekly edge for this week at 52,938, 53,097. All of this, guys, is selling pressure. It is where the sellers overpowered the buyers as of late. The chart that you will see on my futures chart is right here. I'm going to go ahead and remove this line because we're below it. Here's the upper daily edge. That's resistance till proven otherwise. And the pre-market high. Remember 724, 734. It's right there. But yeah, I'm just going to leave it here. Okay. That's where we're at. That is the immediate resistance. Upper daily edge by the pre-market high, immediate resistance. Then 52,828, that happens to be a 76.4 imposter level of that move. That would be a next target. And then up here at the supply, the big topping wick, this is actually a 1 hour zone. And it's been on my chart for ever since it was created. It is the target for today. Okay. All the way up to the all-time high. Here you got your rounding bottom here on the Dow at 52,510. 500, you can see it looks like we pulled back to there. The VWAP is setting right there as well. So that's interesting to note. Here's your daily edge mid. As long as price is above the daily edge mid, you're targeting the upper daily edge. Here's your weekly edge mid. That would apply the same exact way. As long as price stays above the weekly edge mid, you're targeting the upper weekly edge. This is a first buy zone for me. It is based on candlestick structure as well as that weekly edge mid right here and Fibonacci levels. All right. The overnight or the low on Friday, I still have marked right here. The next buy zone below, if we flush 52,237 today for some reason, the next buy zone is 52,068. Now for SPX, which is what I actively trade every single day for day trading. I trade SPX or XSP. So it's a very important chart to me. And this is not an inside nut because we only have regular trading hour information on this thing, but this is where the ES, the S&P 500 futures, made a demand zone. So when price pulled back here and we bounced from here with the confluence of candlestick structure, Fibonacci levels, and EMA levels, price bounced. This is the bounce that you're seeing. Now, we did create a double inside and technically down candle last week. That means you do have supply here at 7,500 to 76.21, the all-time high. Remember that number for SPX, bigger picture, 7,500, big level. All right, daily chart. These are inside candles of this candle right here, and we gapped down. Here's the daily 21, SPX 74.55, which is about 15 points above where we closed yesterday. Expect resistance there. The reversion to the mean from the downside, often you will get resistance. Okay. 74.55 is the daily 21 on the daily chart. So I'm going to go ahead and mark that 7455 on my daily blueprint on SPX because it wasn't on there. Okay. I'm looking for the cloud to now be support 74.17-ish. I'm looking for that to be support. You can see the weekly edge mid lining up right there. This is all support, my friends. Monthly edge mid, weekly edge mid, the cloud support. What was the top of the chop? Price pulls back to a top of chop. You will, if the bulls want to maintain this control, you will now see what was resistance in this choppy range act as support. Time will tell, price will tell me whether or not that is the case. I'm not going to speculate there. All right. For our chart, some of you might be saying AC/DC bull. Yes, that is true, but the AC/DC bull did already play out. Okay, and it's the last day of the month. But nonetheless, this is where we closed yesterday. We closed above the 50 fib. We closed above the top of the choppy range. Remember, this now we would treat as support, right? So we are inside of the bearish GP right now on this SPX chart. It is measuring from here to the low, and we're inside of the bearish GP. The top of the bearish GP lines up with the supply zone. You have an inside and up that was created here yesterday on the gap move up. We came back, we filled that gap yesterday. This was our buy zone down here yesterday. Today, it would serve as the same thing because it worked well yesterday, but it is obviously tested. But I am looking for buyers if price pulls back in this area. Okay. And it is a zone for me. It is also, from Fibonacci perspective, a bull channel, bullish GP. Sorry. So a lot of reasons for me to like this area here. The major Demand zone on the 4-hour, though, is 72.77, and the major supply zone on the 4-hour is 74.72. If price gets up into this supply zone, it would be a counter trend trade. The trend is bullish. Okay, it would be a counter trend trade. The only way I'm trading a counter trend trade is 100% with confirmation. I would be looking for lower highs in this zone and a break below the lower high candle. All right, very, very simple for me. That is just a rule. Okay. All right, let's look at today's blueprint. I have these zones labeled pretty well for you. This is a fresh 4-hour supply, 74.72, 75.30. Above there, upper monthly edge, 75.50. Then above there, another fresh 4-hour zone, 75.80 to 76.21. All right. All right, let's talk about the buy zones. The only way I would be trading these Fibonacci-based buy zones is if I can actively manage them. If I cannot actively manage them, I wouldn't just blindly be trading them, putting a trade on. All right, because price has been choppy for the last week, and we are not in a place where I would say we're not going to be choppy. So, with that being said, for a set and forget trade, I'm still focused on lower, but these are legitimate buy zones in a bullish trending market. The bull channel would be that first buy zone for me, lining up with the weekly edge mid 74.12 to 73.86. Upper daily edge would then be resistance, so it's a target, as would 74.55. And then, of course, my target zone, the supply zone, 7472 to 75.30. If the bull channel does not hold as support, then the next buy zone for me lines up with the bullish GP, lines up here where we had the low yesterday. So that bullish GP plus yesterday's low represents the next buy zone for me, and our lower daily edge is inside of here, 73.70 to 73.48. Going long from here, I now have resistance at this weekly edge mid, so that is a target, as is the upper daily edge, and of course the supply zone being the ultimate target. If price breaks down below this bullish GP, lower weekly edge would be another area that I can watch for signs that bulls are stepping in. I'm not blindly trading this, but if I see signs that bulls are stepping in, I can go long from there. My tested 4-hour demand zone, 72.94 to 72.33. But just below there, there is another fresh 4-hour demand zone, 72.33 to 71.74. All right. So that is my day trading plan for SPX. Of course, if you're in the SPX room, you're not in front of the charts all day. I do share every single day the set and forget trade ideas. I included these two zones in my trade ideas today, but on that graphic, you will see it says only if actively managing. That is what I personally would do. I'm not telling you what to do. This is a legitimate buy zone. Both of these are for me. I'm not telling you what to do. I'm just, that graphic represents what I would do. Okay? All right. Yeah. So, trendy room. I actively day trade SPX and XSP for that first hour. And I call out the levels sometimes just by habit. I might be calling out SPX levels. If you don't trade SPX, maybe you're a futures trader or you trade SPY. What I'm calling out with SPX would still apply because it's all the S&P 500. All right. If I'm calling out things on a NASDAQ and Dow chart and you don't trade NASDAQ and Dow, it's still relative, or it is still relevant information, because the Dow and the NASDAQ is what determines price action in the S&P 500. So if I'm saying that the NASDAQ and the Dow are both at resistance at the same time, then I'm going to naturally assume the S&P 500 would also be at resistance, and it is a possible area to go short. Vice versa, if I say NASDAQ, Dow are at support, even if the S&P 500 might not be at an exact support line on my chart, I will still take a SPX or XSP trade just based on the fact that the NASDAQ and the Dow are there. All right. Trendy Room. I love trading the PMZ. I have not been trading it on names besides SPX. I haven't been doing that for quite some time because my focus has been SPX and XSP, especially after my January class. But there is no reason why you can't trade the PMZ based on the exact same criteria. So let's look at Apple. It's a 5-minute chart is what we day trade off of. That's what's going to give you your PMZ levels. My supply zone and demand zone are based on 2 and 4 hour candles. The first thing I'm looking for every time, guys, is an imbalance candle. There is the imbalance candle. I look up and to the left and I can see consolidation big time, and then the imbalance down. That's how I drew that target zone to the upside, or the zone that you can look to go short from. Vice versa, on the 2-hour chart, you see the green zone down there. Wow, I have to give this thing more time. This is based on the same criteria, but an imbalance to the upside. So I'm going to show you that. You got the bigger than normal candles right there, right? All right, so that's where that zone comes from. This is my target zone to the downside. This is my target zone to the upside. These are the major levels on a day trading chart based on the 2-hour time frame. Now, if Apple was a name that I wanted to trade out of the PMZ, I would find the other important levels besides the buy and the sell zone. Okay. I would find the other important levels, and that gives me trim zones. So you might have 2-hour inside and down formations, and they're not marked as a zone on my chart because they were just baby moves, right? But still, it's a formation, so it's an important level. I can put a trim right there. You can see inside and down right above it, right? I can also put a line right on top of the upper daily edge or the weekly edge mid. I can also draw Fibonacci's of the down move. Where did this down move really get going? Well, it was after this topping wick, we just started moving down, right? So I can draw some Fibonacci's right here. I love trading fibs, guys. So this could give me my next targets, the 50 fib and the 618 fib, important Fibonacci levels, right? So now I have created targets to the upside before the ultimate target. I can do the same thing to the downside. I can look at this pretty little rounding bottom right there, and I can put a line of support where it rounded out and all of these candles touched and found support. That would give me a level to the downside, right, as a target if I were trading the PMZ from here. This gives me a target to the downside. I can also run the Fibonacci to get levels that I would look to trade. Wow, that level I already have on there is the 50. Here's the 618. That's an important level. So now I have two targets to the downside if I'm short below the PMZ before my ultimate target. And that's how I make a daily blueprint for any other name besides SPX and XSP. I can do it on any of these names. So if I come in here and I want to trade, y'all pick a name. Somebody give me some names. And we will create these together. TLC gave me Amazon. All right, so Amazon. I've got a major level here based on that big old down candle. Look how well it worked yesterday. Worked, right? For sure, it worked. Look at where the big imbalance candle is to the upside. That gives me a target to the upside, a target to the downside. Now, I want some levels besides these that I can trim at. Well, I have a weekly edge sitting right here, but let's pretend you didn't have the weekly edges. I've got in it a inside and down right here. It's not one that I would put a zone because it's not a big move down, but it does give me a target to the upside if I'm long above the PMZ before my ultimate target. I can also run Fibonacci from that big old topping wick yesterday to the most recent low. I love using the 38.2 if it's in play. There's the 50, the 618 lines up perfectly. So now I've created two targets before my ultimate target. Then vice versa to the downside. Well, I got a lower daily edge right here, but let's pretend you don't have the trendy indicators and you want to find some downside targets. Run your fibs of where this move up got going, and you will see we're right at the 50, and then I got a 618 right here. That can be a target. And did I already put a target on the 50? I can't tell. Let me look. No. All right. So you could use this 50 or you could use the pre-market low. I like to have a pre-market high and low on most of my charts, and I will use them as targets. So I'm going to go ahead and move that to there. So now when the PMZ prints here, I got a target to the upside. Boom. And targets to the downside. Boom. And that's how you create a chart for Amazon, or how I create charts for Amazon. Rad, I'll do one more and then I'm going to hop off of here before the first hour. Here's your imbalance candle down. Here's your imbalance candle up. That creates that red zone and that green zone for me. Now, I want targets in between. Well, you got an inside and down right here. It's not a huge move down, is why it's not a big red box, right? You got a candle body here before two topping wicks. That gives me another target on the way up to the ultimate target. Vice versa, this low that was created here Friday afternoon before we got the overnight move and then the move up on Monday, right there. Boom. Okay, so that's going to give me a target to the downside. Just like the other names, you can run your Fibonacci's of the recent move. I like that. It's right in between the 50 and the 618. If I wanted another level here, I could put a line just above the imposter level to give me another target to the downside before my ultimate target. And that's how I would do it. And I do that for all of the names. Helen, good to see you. How do I get the labels such as upper daily edge? So Helen, all I do is, let's see, which one? Okay, this one right here. I drew the line on it, and then you just go to edit properties and I name it upper DE right here. And then on show name, I click on the right. And that's it. That's how I manually did it, my dear. No, no, they're not automatic. I'm just, I label them. If I look, if I wasn't sharing my screens, I wouldn't even put lines there, nor would I label them because I have the indicators. I'm just trying to help people. The edges are a proprietary indicator, Joe. So if you have the edges, you have them. I have the indicators. I bought them 4 years ago. So I have them. And that's how I know to where to put an upper daily. No, it's fine. No problem. All right, guys, I'm going to hop off of here. I'll be back on about 5 minutes before the bell rings to put a PMZ on the SPX chart manually. And then for the next hour or the first live hour of the market, I will call out trades that are setting up, aggressive or conservative. You decide, hopefully, which process you like to trade. If you're the aggressive trader and I say, hey, this is an aggressive long above the PMZ, boom, that's your signal. That's an aggressive long above the PMZ according to trendy methodology. If I say, if you're conservative, then you're waiting for a candle to close and a retrace, then I'm talking to you if you take the conservative approach, right? I try to call out what I am seeing as I am seeing it, not just the trades that I personally am going to take, but for both the aggressive and the conservative trader. I am, just so everyone in both rooms knows, 99% of the time, I am a conservative trader. I wait for candle closes and I wait for retraces back to buy and sell zones and confirmation. I am also conservative in the fact that I know where I want to be a buyer, I know where I want to be a seller, and if price isn't there, I know that my process tells me I do nothing. All right. So that's my trading personality. Not saying it has to be yours, just telling you what I do. Another thing that is a non negotiable rule for me is that my reward has to be better than what my risk is. So if I have a risk of 10 points and my reward is 4, to first target. It's just not a trade that I'm going to take. I'm not telling you you can't take the trade by any stretch of the imagination, right? Those of us on this side of the mic, we're just traders trading our own money and calling out what we're seeing. We're not telling you how to trade your money. Okay. All right. That will do her. I will see all of you in approximately 12 minutes. Much love, fam.